ESPN, which is owned by Disney, just signed a $1.5 billion deal, but I'm not entirely sure if this is going to save the company. But what is wrong with Disney? Why did they even sign this deal in the first place? And what is this deal? So in case you didn't know and haven't heard, ESPN signed a deal with Penn Entertainment for $1.5 billion. Penn Entertainment is a gambling sportsbook app company, and they're going to join together with ESPN. On paper, that makes a whole lot of sense because you take sports and betting and you basically get FanDuel but with a cape. Okay, this is supercharged because ESPN is the primary sports brand if you're looking to anything sports related. However, the problem at Disney isn't just ESPN. There are three primary issues here. One, it's me and it's you. It's cord cutting. Because I ain't paying no cable bill. I'm just not, okay? I've never paid one in my life. I'm not going to start now, okay? And the other part of this is the fact that their product is getting way more expensive and there are more competitors now in the space than ever. Because remember, back in the day, I say back in the day, but let's just say the early 2000s, from 2000 up to about 2010 or so, you could only watch sports primarily on ESPN. Yeah, you might catch, an NBA game on TNT or something like that, but you really needed cable. Apple did not have a streaming service back then. Amazon did not have a streaming service back then. Today, they do, and they can use their power to bid up the price because the way that ESPN made money was essentially this. They would come to the NBA, come to the NFL, the MLB, college football, whatever it was, and say, look, we'll give you $3 billion. We will air 40, 50 of your games, however many games they want to air, and they will put that on ESPN. It's on ESPN. You want to watch those things, you go and pay the cable companies. Well, now the NBA says, look, I can air my stuff on Amazon and TNT and Apple now. I don't have to pay y'all as much as, I don't have to take your $3 billion. I want 6. And that is what is happening right now for ESPN. So now all of these leagues are paying or charging more for their product because Apple has more money than Disney. Amazon has more money than Disney. And a lot of these other tech companies, Roku, you can throw them out there as well, has more money and cash. In either case, what this does is put pressure on Disney because now, if you're not streaming your ESPN service through Disney Plus and the Hulu bundle, and you don't have to now either, they're in trouble because that revenue is dropping, their costs are rising, and that gap is still there. Yes, this $1.5 billion deal can help, and it is a drop in the bucket. I just don't know if it's going to solve the cost piece of this because I don't see those costs falling off at any point right now. And Amazon can continue expanding. If we don't know anything else, we know for a fact Amazon is going to expand in one way or another, and they are, whether they're good or bad at it, they are going to drive up the cost for Disney. That is the thing. That's the primary issue here. Apple is someone who's not going to get outbid per se. However, the fact that they have already cornered the market on live soccer, that's a product that Disney does not have anymore. And if they don't have it, that makes them less valuable, which for soccer fans, if that's the only thing you watch, you are not subscribing to Disney Plus or ESPN or any of their other assets and properties, which again hurts them on the bottom line. That is their issue. Yes, I think sports betting on paper, this is a perfect union for them. I'm not a sports bettor, so you wouldn't see me do it, but this is just a drop in the bucket. I think if I remember correctly, on the quarterly revenue numbers, they made about $21 billion on the top line. So they brought in $21 billion, and I'm doing this from memory. I think they spent about $15 billion. Again, you're getting another 1.5, but you're making 21 before, another 1.5. I don't know if that solves the issue if your costs are still going to rise over time. Now, it is important to note that at the time I'm recording this video, they are doing their earnings call. They will be doing their earnings call. I just want to double check in the next 15 minutes or so. So the cost of Disney, the share price of Disney will change by the time this is uploaded and you see it. Also, they're likely going to give us even more information on where they are financially. Has the revenue increased or decreased and what is going on there? The last time I checked, they don't really break out the numbers significantly from parks and recreation and ESPN and so on and so forth. They do give us some from just, entertainment and parks, but I don't recall getting a whole bunch from here's how much we make from movies, here's how much we make from live sports, so on and so forth. We'll see if they give us that information today, and we'll obviously break it down. If you guys want it, you can tell me in the comments below. But that is the big issue here. Anytime you're looking at any stock, you need to look at the economics. And Disney, really media across the board, has an economic problem. Because remember, you probably saw major layoffs at ESPN. Okay, you've likely heard a little bit about that. You've probably heard, I'm a sports fan, obviously, to college football. There's been a lot of conference realignment things happening related to TV deals, right? And now they are paying much more for these conferences because you got major players like Fox Sports, which wasn't that big a thing even 10 or 15 years ago, is a much bigger player now, driving up the cost for everything in between, and is putting so much pressure on Disney to remain stable in the way that they're used to. But aside from that, the main thing again is the economics. Every business is going to have some level of economics. What are you paying for the services and things you are creating, and how much money are you getting back from that? And they are shrinking in the worst way possible, in that the revenue piece is shrinking and the cost piece is increasing. That is going to leave a gap. Sports betting is going to narrow the gap, but I think it's just a dime in the bucket. That is what they need to solve. Now, if you are looking at Disney or you currently own Disney, I'm not necessarily here to tell you to buy or sell, because it's going to be hard to see how valuable this deal is going to be in the future. However, I did say that I wasn't a big fan of Disney, haven't been a big fan of Disney for quite some time, because the stock just hasn't been great. Okay, so if you want to watch that video, you definitely want to go check out the video. Okay, it should be on the screen by now, because it is important to understand how much Disney is actually worth and how good the company has been in general. And I say that because if you take out 2020, the stock really hasn't performed really between 8 to 10 years. It just really hasn't. We were excited because they had launched Disney Plus during the pandemic, but ever since, the company has been kind of in the middle. They've also had a lot of turnover with the CEO as well. We talked about that too. So in either case, you definitely want to check out more about Disney. I've covered them in detail, from the CEO to what's been going on to what I think the price of Disney should be. So definitely make sure you check out that video next.